You want to own companies, stocks, where your EQ, your emotional intelligence, and your IQ is the highest. So what are the top mistakes to avoid as a value investor? Some of the mistakes I'll be talking about, I made it myself. So they come from a very painful experience. So the number one is don't let the time horizon shrink. So your biggest enemy actually in investing is actually yourself, your own emotions. If you go through investing mindlessly and kind of allow the stock market into your life, it's going to shrink your time horizon. Actually, yes and no. Actually, it's going to shrink and elongate your time horizon at the worst possible times. So what happens is usually this is what happens. The market is going up and the stocks are going up, everybody's long-term investor. Then the market declines and everybody's time horizon shrinks from long-term investor to short-term investor, okay? Well, the truth is somewhere in the middle, okay? Your time horizon should not elongate or shrink based on what the market is doing. You should always have a long-term time horizon. This is not something just specific to me or to value investors. This is specific to anybody who invests in the stock market, because in the short term, stock market behavior is completely random. You have no idea where the stock market is going to open tomorrow, or where it's going to be a month from now. When people go on CNBC, on Bloomberg, and start professing that where the stock market is going to be 6 months from now, they sound very confident. But I would argue, don't let that confidence sway you, because they really don't know. There are several ways to deal with that. Number one, what I do is that I don't watch business TV during the day. That's number one. Number two, I look at my portfolio once a day. Sometimes more often when I'm just trying to buy something, I'm trying to pick a spot. But I really spend very little time looking at my portfolio. Because what happens when you look at your portfolio many times a day, the stock price volatility starts shrinking the time horizon. So that's another thing you can do. So just by doing these two things, you can maintain your time horizon. So another lesson I learned, actually painfully, don't buy stocks just because they look statistically cheap. And this happens to, I almost want to say all investors go through this lesson. Earlier in my career, I was always attracted to stocks that look very cheap. Okay, but a lot of times what happens, the cheapness becomes the kind of a shiny object that makes you turn blind to other aspects of the company that may be in trouble. Especially when the company is run by bad management. I cannot tell you how many times I closed the eyes on the management that was kind of questionable, had questionable ethics or questionable capital allocation record, but the stock was statistically cheap and I lost my money every single time. I don't think you can make a good deal with bad people. And by the way, which brings me to the next point, another lesson I learned. You want to own companies, stocks, where your EQ, your emotional intelligence, and your IQ is the highest. Now, here's the interesting part. If you bought a company that looks statistically cheap, but it's run by bad people, I'm speaking from my personal experience, my EQ was not very high, because it's a matter of time before things will go bad. How can I trust these people to make right decisions where I didn't trust them to begin with? So two lessons combined. Number one, make sure when you buy companies, and I'm speaking as much to myself as to whoever's watching this, okay? Whenever you buy companies, make sure you buy companies run by good people, people you trust, okay? That's number one. And number two, the second part of this lesson is we all have spots where we are the strongest and spots where we're weakest. Okay, and here you can break it up into your ability to analyze companies and your emotional state while you analyze them, while you're holding them. Some companies, for instance, I can't analyze. I can't analyze companies that are early stage pharmaceutical companies because that requires a skill set I just simply don't have. I don't buy those companies because my IQ is very low there. Now, there's sort of type of companies where my EQ is not very high. That would be when it comes to retailer. My experience with owning retail stocks has been horrendous. Therefore, I'm probably not as a rational investor in retail companies as I am when it comes to other type of companies. Any investor, like almost anybody who's investing, you probably need 20, 30 stocks in your portfolio, and there are thousands of stocks out there. Knowing what not to own is as important as knowing what to own. So if there's 5,000 stocks out there, you only need 20 to 30 stocks. Well, so companies where you have a low IQ, don't buy them. Companies that are run by bad people, don't buy them either. So by doing that, you just you're shrinking your universe from 5,000 stocks to a few thousand stocks. So there's still plenty of stocks to look at. Another lesson I learned from my readers, what not to do, is do your own research. I cannot tell you how much it pains me when I get an email when somebody writes, Vitaliy, I just read your write-up on this company and right away I bought the stock. The reason it pains me because this person just read my analysis, has not done his or her research and bought the stock. There are so many problems with that. Number one, I might have made a mistake. That's number one. Number two, in the future, things may change. The assumptions I made, when I bought the stock may no longer there, and I may sell the stock. That person still holds the stock because I bought it, but that person doesn't know when I'm going to sell it, and I'm under no obligation to tell him when to sell it. That's point number one. Point number two, and this is very, very important, the process of doing research is actually increases not just your IQ, but your EQ, okay? Because it's a matter of time before the stock could get halved. Happens probably half of my stocks halved at some point in time, okay? But because we've done our research, because we have the models, we can go back and see, is there any fundamental change in the, in the news flow, etc., that changes the fair value of the company. There is a tremendous amount of value of actually going through and doing the research. A person who hasn't done the research doesn't have that. And therefore, they're going to be a lot less rational when the stock price declines. When you read an article, all right, and you like the idea, that's great. But that should be just the beginning of your investment process, not the end. As an investor, another thing I learned, as an investor, you want to have strong opinions loosely held. In other words, when you're buying a stock, it's an arrogant decision. Because I usually call it, at this point, you want to be thoughtfully arrogant. You've done your own research, and you're basically saying you're basically saying the stock is going to appreciate in price, but the problem is when you buy it, somebody's actually selling to you. So this person thinks that the stock price is not going to go up or will decline. So buying a stock in general or selling, it's an arrogant decision because somebody on the other side disagrees with you. Now, if you've done your research, you deserve to be arrogant. You are thoughtfully arrogant. And so at this point, you're showing your strong opinion. However, you want to hold them loosely. And what I mean by this, if the facts change, you want to change your mind. When you buy a company, you make certain assumptions. If the new data comes in and that proves that your certain assumptions were wrong, then you want to change your mind. What I've observed, and by the way, I've done this myself plenty, you made a decision, and then now you've become married to the decision, and you become stubborn when the new data shows up. You either ignore the data or you make excuses. And I would argue that when the facts change, you do want to change your mind.